morning, ladies and gentlemen. I was going to commend some people for going on Google before we came in to get our life history. You are welcome after the tea break. And I think we have a very interesting session now. Let me confess before we start. During the tea break, we're having a discussion. Violetta and Richard and myself. We discussed for quite a while, and we talked about the topics they were going to share with you. By the time we finished discussing, we realized and we asked ourselves, have we not even just finished the session? Is there any need to go back there and talk some more? But we felt we still have to actually share. We are fortunate to have two experts. They're experts in the topics they have been invited to talk about. And as you can see from their profiles, Violetta has extensive knowledge in deposit insurance. From her work with the Deposit Insurance Fund of Kosovo, I noticed that two areas which keep niggling at everybody involved in deposit insurance. She has been on top of this. Target fund issue is a big question mark when you manage deposit insurance fund. But she has so much knowledge of that and a lot of experience in that. It's quite admirable. And in the last session, we were talking about premium assessment and premium collection and management. Violetta has a lot of knowledge of that as well. Of course, she knows all about supervision as well. So we're going to Violetta, from her point of view, all about there is to know about the pay box system. Violetta has diverse knowledge, of course, both in public sector, non-profit sector. She has worked in finance. She has worked in project management. You name it. So we are actually very, very lucky to have Violetta with us, a product of the University of Greenwich in London, where she obtained her MD. Can we give a round of applause to Violetta? Now, our second discussant, Richard. Richard is equally very, very experienced in these matters. Richard is what I would call a core examiner. He's an examiner to the core, having worked with the Bank of Tanzania all along the examination line from 2008 to 2009 to 2018. 1994, thank you. So, deposit insurance essentially is all about keeping an eye on the banks. Whether you are doing it from the central bank or from the deposit insurance point of view, the whole idea is to make sure the banks operate according to the prudential guidelines. The guidelines are set out to make sure that the banks don't Now, when you have an examiner like Richard, okay. I'm the first person to be given 2 microphones. I don't know why. So when you have a co-examiner like Richard, I think virtually everything there is to learn about the business, we're going to hear from him as well. Richard, in 2018, became the acting director of the Deposit Insurance Fund of Tanzania. This is as a result of his previous work as an examiner with the Bank of Tanzania and also as a top official of the Deposit Insurance Fund of Tanzania. So this responsibility given to him actually is well deserved, because I don't see any credential that would be stronger than what he has put on the table for this job. Please, let's give a round of applause to Richard. We have 2 speakers. Each speaker will have 30 minutes. So that we'll have sufficient time for question and answer. I know there is going to be a deluge of questions after these presentations. Violetta, you have some slides to present, so share with us. I am going to restrict myself as moderator. I will not make any contribution. I will give all the time to the 2 speakers and to questions from the floor as well. So we'll give you 30 minutes. You are going to speak on what now?
Thank you very much for your... So 2 microphones. Thank you very much for your kind introduction. Actually, I need to share something with you. I was about to take the taxi to go to the airport, and our second son saw the agenda and he said, "Oh, Mom, is really a prince moderating the session?" So I'm very glad to have met Prince, and thank you for such a kind introduction. Before I start my presentation, I want to join my colleagues in thanking, firstly, Chairman Kagoru, Julia for her invite, to thank, in his absence, Governor Mutebile, for and Bank of Uganda staff and DPF staff for an excellent organization of the event. And I will say, Wibale Nyo, thank you very much for supporting the deposit insurance community under the umbrella of IADE, and greetings and thanking David for his presence to the region. So with that, sorry.
Come on.
Oh, okay. I will provide the context by presenting the key features of Kosovo deposit insurance and its assessment result of Kosovo DIS, and it's from the compliance assessment conducted back in May 2015. The assessment was made with IADC core principles. Since our audience here, distinguished audience, include prospective deposit insurance system, I'll be providing you with an insight of Kosovo experience in establishing of DIS, focusing on key facts in the interest of time and relevancy of the topic. But you are more than welcome to approach me on bilateral basis or by email and ask any question. The aim is to help each other to a good start that fits specifics of your country. And at the end, I will end my presentation with slides that aim to provide you with my perspective. And I'm not talking here on behalf of DIF, since I have left as of 1st of May. My perspective on the precondition for deposit insurers' contribution to the financial stability with a narrow mandate. So, in the Kosovo financial safety net, the deposit insurer is established independently. The central bank is mandated with prudential regulation, supervision, resolution, and lender of last resort, with emergency liquidity assistance as a tool. So the public policy objective of Kosovo DIS is to protect small depositors from loss in case of a bank failure, but also to support the central bank in meeting its own objective to foster sound, solvent, and efficient functioning of a stable market-based financial system. Back in 2015, we have underwent an assessment of compliance with IADI core principles. So after we have written the self-assessment, the compliance assessment was organized in a format of the workshop held in May 2015, where David also has participated. And these are the grades. I have included the grades of that assessment. I know David mentioned yesterday rightly that the setup or the self-assessment is good to be done prior to the FSAP. But I would like also to share my experience in leading DIFC. Actually, IADI core principles have served for us as a standard, as a benchmark, and a tool for our strategic development. Because if the vision of a deposit insurer is actually to to protect the depositor and maintain public confidence, then IADI core principles provide a great framework which you can assess yourself and see the weaknesses in the system to advance them strategically. So IADI core principles in that sense provide a 360-degree perspective, also discussing internal and external factors that you can include in your assessment. So we have been assessed largely compliant in the assessment, whereby the finding included that the public policy objectives are formally specified and consistent with its design features. However, weaknesses were noted in the review process. Therefore, recommended action was to conduct a regular internal and external review, to which extent DIFC is meeting its public policy objectives. And rightfully, we have actually fulfilled this recommendation. We have included in the statute of DIF, which is the highest legislation after the law, formally have included that we will conduct regular internal and external reviews of our of how we are meeting its public policy objective. So the mandate of DIFC is reimbursement of insured deposits and participation with funds, but in collaboration with the central bank in a resolution of a bank, up to the limit which fulfills the same obligation as in the compensation process. So the least cost test in this sense. We were graded largely compliant, whereby the findings were that the powers and the mandate were clearly and formally specified and sufficient to fulfill its public policy objective. However, it was noted that DIFC lacks necessary access to data in order to verify the premiums and determine insured deposits. Recommended action were, of course, first to provide access to DIFC on necessary data for on-site examination to verify the premiums and determine the insured deposits. And the second, which we have fulfilled because this was under our control, we have actually issued a regulation by which the member banks will be required to submit the data in a format which will determine the insured deposits, and these data will be submitted into our system within 72 hours. So the second recommendation has been fulfilled. We were lagging on the first one. I want to share with you also that our external auditor has also made this recommendation, has flagged in their report. They said that the basic of verification of the premium is that you want to make sure that the source of data for that calculation is correct. And because we don't have such mandate, the external auditor recommended also that we cooperate with the central bank in order that the submission of data is verified for its accuracy to ensure that we are reporting the exact premium. So on the governance, DIFC has been established as an independent public institution and with operational and administrative autonomy from the government structure and civil service. It reports to the central bank and is governed by the management board, which is composed of members, the governor of the central bank or his authorized representative, representative of Ministry of Finance, and the representative from Ministry of Finance comes really because of the stake of the Ministry of Finance in setting up, their support in setting up the deposit insurance system in Kosovo. Managing director and one expert in deposit insurance, finance, and a certified auditor, one expert, a certified auditor. The management board is chaired by the CBK representative since establishment. On these core principles, we have been assessed largely compliant, although it has not affected the assessment. The finding, the experts have found that the current board structure may create a perception of conflict of interest in two areas. The first, that DIFC chair is not an independent board member, which our colleague Mohammed has explained really excellently and gave a very good practice. And the executive director is a voting member of the board and potentially undermining the operational independence. So the recommended action here was to formalize the restriction, although in practice it was done. We have a clause on conflict of interest, and if there are any subjects which are discussed, we ought, all of us, to exclude ourselves from the discussion and participation. But we have, in line with the recommendation, the statute included that the managing director will explicitly not just exclude itself from the matters involving employment, but also from other which may be deemed as appropriate. And also requiring the management board to report to higher authority, legislative and parliament. So the management board is chaired by the central bank, and the DIFC reports to the central bank. So the recommendation, I think, it's in line with good governance. So we operate, the coverage is limited up to €5,000 per depositor per member bank, and it covers individuals, legal persons, joint and trust accounts. Of course, we apply the exclusions, which are deposits of banks, pension, retirement funds, local and central government and administrative authority. So we have been assessed here largely compliant. Maybe just a quick information that the limited coverage of 5,000, it's not what we have started. We have started with 2,000 than in our funding, of course. The finding was that the level and scope of deposit insurance is adequate to meet public policy objective, but the lengthy exclusion list may be a potential for delaying a payout. So also the finding included that we have to look at the deposit insurance limit in the region. Our country is very small. We are under 2 million people. So we have I can go to another capital within 1 hour. So that's why the experts have really made a very good assessment that we need to look at the deposit insurance limit in the region as well, in case any impact. So the recommended action was that the deposit insurance limit is reviewed after the 2018, and also the depositors of emerging banks have a period of dual coverage and are notified of the changes of the coverage, which we don't have it at all, and this would require the law changes to the law. DIS of Kosovo operates an expanded ex-ante funded scheme. We were assessed here materially non-compliant because our emergency funding arrangements were insufficient. And my next slides I will elaborate more, but the idea is the backup funding was with EBRD and it was 10 million. And at that time when we were established, we were a very new institution and the mandate was not very, the importance of the existence was not that very known so at the beginning. But on the other hand, we had an implementation condition from the German government through KfW to have an emergency backup funding. And emergency backup funding is very crucial to the public confidence. So we just, our Minister of Finance said, oh, I can't give you more than 10 million. So we went for the 10 million just to have it. So this is why this finding, so the 10 million were not based on the analysis, if you say. So my recommendation is that if you can, of the system is that we don't have power to access funds from the central bank or from Ministry of Finance, and this may undermine the public confidence. We conducted yearly conferences in Kosovo yearly, where we presented the annual report and also increased with activities to increase the public awareness. So it would have taken just one question from a journalist to ask, you are insuring like 100 millions of euros, but you have only, let's say, 10 million or 20 million in the fund. So luckily we didn't have that question, but we worked very hard to have an emergency. Also, the experts recommended that there is a lack of clarity regarding the use of funds in resolution. So in their view, also the EFSA came with the same recommendation that we need to clarify that use of funds in the purchase and in least cost test in the resolution. So we have in 2016 arranged for a second standby credit line. And this is not a credit line that you have, it's a standby, and you pay only the commitment fee. And we have then gone with a proper analysis, and we said, okay, this is the target fund size for us. It's 8 to 9% of the total insured deposits, but this is the balance that we have, and we want to borrow on standby terms for the difference until, with the time frame, what we have set up to reach the target fund size. So that will be the logic and behind our request, and it was supported. And we have two standby credits line, one which will expire in 2020, and the other one will expire in 5 years. So a little bit of how we were established. Kosovo Deposit Insurance is established as a development project, bilateral cooperation between Kosovo and German governments. And we had the seed capital donated in amount of 17.5 million, provided to fulfill two objectives. The first one is to establish deposit insurance system. When you establish, you need the funding there in order to maintain the public confidence, be it a loan from the Ministry of Finance that you can pay back after you have reached the target that you have set, or a donated money from international organization. We have been very a backing of the World Bank, actually International Development Association, and the German government through KfW. And as you see, the second we have received in total from our government 11 million. The third tranche was actually financed by IDA, and the German government provided 4.5 million for the establishment, and later on, because of the success of the project, it put in additional 2 million to support the deposit insurance limit, the rise from 2,000 to 5,000. Some key facts and I will explain some recommendations which from our experience. So the full credit for initiation and the establishment goes to the central bank, and I'm really glad to see this kind brochure of the agenda, and also Bank of Uganda logo here. And this is our first conference was, you remind me of DIFC, because our first conference was actually jointly organized, and I also want to thank Bank of Uganda for supporting. The DIS can't be established without the full support of Bank of Uganda, central banks. So the full credit goes to the central bank for initiating the project. It took 2 years to draft the deposit insurance law. The law was enacted in 2011, May. The system was made effective and the premium was collected from member banks. A central bank staff was appointed as an interim director, and only we had the secondary legislation which regulated the members' reporting of insurance deposits as well as collection of premiums. So this is, and also the MOU on information exchange with the central bank, which was concluded and signed. And this is because our assessment of premiums is based on the information provided by the supervision of the central bank. So I was the first employee of the fund, 1st of August, and we were hosted at the central bank premises for a year. In August, we have signed a financing agreement with the World Bank on behalf of International Development Association to provide the seed funding. The central bank staff were hired, seconded to cover the legal, financial, PR, and IT duties, but this were more critical in establishment. We have adopted central bank policies on employment and budgeting, which were also the disbursement condition of the World Bank project. And by September, we have signed a 3-party financing and project agreement with the German government, our government, and DIFC as a project executing agency for the financial support of the establishment of Kosovo DIS. We have also had a TEA, technical assistant, in the amount of $500,000. So my presenting this slide is you may be rushed. So please have a look at again before you submit if there are any changes. You see, our law has been made. The system has been made effective in 2011, and after not even a year, we had to initiate amendments to the deposit insurance law, and this is to define DIS participation in a resolution. So we relocated office premises. Seconding of CBK staff concluded. We had 2 people on board and also undergone an FSAP. So before making any decision on how you want to set up, please have a look, because an independent agency would mean a lot of logisticals. Within central bank, you have a procurements done for you, you have PR done for you. So I don't advocate any, but I'm just saying that it will be good to think through and see how much time is needed and effort. So we obtained the borrowing facility in 2013 and signed the second financing agreement, which I referenced, for the additional $2 million. By 2014, we fulfilled all FSAP recommendations. Supervisory mission project. The project has successfully achieved its objectives, and KfW, which I quoted this, DIF constitutes now an integral part of the financial system in the Republic of Kosovo, because they have assessed that we have implemented effectively the legal framework for the protection of the depositors, focused on the sustainability of the establishment. We relocated to new office premises. So bear in mind, when you're establishing, it's not recommended to move offices that often in the first couple of years. So my recommendation. So this is, this slide actually represents my view on DIS that the key prerequisite for financial stability is the existence and fully practiced comprehensive collaboration framework with the central bank. As you will see, it will enable, this comprehensive framework will enable the compliance assessment fulfillment of with 11 CP, and we will fill 11 recommended actions. So from CP2, mandate and powers, then we have deposit insurance role and contingency planning. We have a membership because it's because the members they are automatically are members in this deposit insurance system once they are licensed to take deposits. But this slide explains how important it is to get the support and collaboration with the central bank and the system of deposit insurance. So, okay, this is my last slide. So the topic about why deposit insurance, it is because we ought to contribute to the financial stability. And there are two aspects here. Is deposit protection and public confidence. Deposit protection because providing access to insure deposits timely, and public confidence to prevent the bank run or minimize the contagion in the system. And I have looked at to the definitions of what is effective DIS. IADI provides for 16 core principles, whereas the Basel III LCR, which stands for liquidity coverage ratio, defines effective deposit insurance scheme as the one that has ability to make prompt payouts, that actually guarantees to make prompt payouts. Coverage level is clearly defined, and there is a high public awareness. Also, it has formally specified powers and the mandate, and operationally independent, is based on a system of pre-funding and has adequate means ensuring ready access to additional funding in the event of a large call on its reserves. So I have identified two types of risks for that may prevent us to contribution to financial stability. One is risk to operational readiness and risk to reputation from the assessment of compliance which was made. First is that DIFC legal framework provides that receiver submits the data to DIFC within 3 working days following an insured event. However, the receiver's duty is not specified specifically in the Banking Act. The legal risk we have determined how to address. It will be addressed in the MOU with the central bank. And the second is legal framework provides power to support its mandate as an and participation of DIFC staff in the examination. Although established in the law, on-site examinations are yet to be conducted. So the message is legal powers to be put in practice. The risk to reputation is the law doesn't specify the hierarchy of accountability for the management board. This lack of accountability may undermine the public confidence in the system. Also, the fact that DIFC reports to the central bank, as well as at the same time management board is chaired by the representative of the central bank. So while the management board doesn't report to higher authority and chairperson remains central bank representative.
Ladies and gentlemen, I'm very, very sure Violetta deserves a louder round of applause. She did justice to her topic in exactly 30 minutes. Thank you very much.
You're welcome.
With your kind permission, I would like us to take a second presentation before we go into question and answer. Because to my mind, there might be some overlap. So we have seen moderator has kindly and very effectively taken us through the whole process. And this will be of great benefit to those jurisdictions that are just starting out their deposit insurance schemes. What Richard will do is to give us a hands-on experience of what you are going to be going through, especially for those that are starting out again. And for those that are already operating, naturally we will have a lot to learn from his experience. So that when we come to question and answer, I think it will be more enriching when the questions are flying all over the place. To two of them, I will stay neutral. But I think it will be good to hear from Richard. Richard, are you ready? Yeah. Can we give him a round of applause, please?
Allow me to make a presentation while this is.
So you end at 12:15.
Thank you very much, Prince, for giving me the opportunity to speak to this public audience. Let me start by giving a word of thanks to Uganda Deposit Protection Fund for organizing this important event on behalf of Africa Regional Committee. Deposit insurance, particularly Paybox Plus experience. So I used to call this Uganda Deposit Protection Fund. And if you are not careful, you may pronounce it Uganda People's Defense Force. So you have UDPF and UPDF. So you need to be careful when you're pronouncing the two. That's why they prefer to call it Deposit Protection Fund of Uganda, rather than saying Uganda Deposit Protection Fund, because people may confuse it with Uganda People's Defense Force, which is the army. But again, UDPF is also an army because it's taking care of depositors. So UPDF is taking care of people of Uganda for invasion from the externalities. And Julian and the team is taking care of depositors from externalities coming from mismanaged banks. So they're all armies. Not of them are speaking about them. They are also in the army on their way. Okay, well, we will come here on Sunday, and some speeches yesterday. Those who speak mentioned that there are some colleagues who assisted UDPF to be the way they are today. Among them, Tanzania was not there. But indeed we did. I remember we hosted people from Uganda to learn about people's insurance in Tanzania. I remember we exchanged emails with Julia to talk about issues in people's insurance fund. But the speakers did it purposely not to mention Tanzania because they knew they gave me a slot in this public to speak. So, take me this opportunity to mention it also. We have a hand in success that we see today at the Deposit Protection Fund of Uganda. And we are ready to continue collaborating with them, exchanging experiences, so that as the other team members, we all move forward in protecting depositors in our region. Having said that, allow me now to make a presentation. Okay. Okay, my presentation are going to be organized in 7 parts. In the first one, I'm going to talk briefly about background, where are we coming from. Secondly, I'll talk about governance issues in relation to DIB. That is the acronym of Deposit Insurance Board in Tanzania. Then I'll talk briefly about mandate. Then in 4, I'll talk about contribution to financial stability, whereby I'll be talking about our practical experience in exercising our mandate, the challenges that we face, lessons that we learn, and then the way forward. so as a way background, to start with, Deposit Insurance Board of Tanzania is established under the banking law. Mahmoud is talking about the previous one, the Kenya first institution of deposit insurance. Like Kenya, we were also established under the Banking Act. Our act is known as Banking and Financial Institutions Act, which was enacted in 1991. And then was repealed in 2 years, 006. So in provisions from 36 to 42 of the new banking law, there are provisions that provide for continue to exist deposit insurance fund, and then deposit insurance board, which is an institution that is managed deposit insurance fund. And the way we started operations in year 1994. Maybe I can talk briefly on the history in Tanzania. Before 1991, we used to have government banks. Remember, we were managing a centrally controlled economy. So we have few banks controlled and managed only by government and doing business most part by government institutions. So in 1991, we decided to liberalize. So we invited private banks, we invited foreign banks. So with that, those who drafted the law saw in advance the need of protection to depositors, because now we are open the economy to competition. People will be competing in banking business, and out of the competition, failure is one of the phenomena. So in understanding of that, they made some provisions in the banking law to take care of the depositors in terms of having a deposit insurance institution in place. So we are born in peacetime. We've seen most of the deposit insurance systems came into being after the disaster. Okay, so we are managing, and our deposit insurance system, we're having 52 member institutions as of June 2019. The maximum coverage in Tanzania is 1.5 Tanzania shillings, that is 655 USD only. And with that, we made full coverage to 95%, more than 95% of all depositors in our banking system. Our fund size, as of 30th June, this is the audited accounts, stood at Tanzanian shillings 439. This is okay. That is briefly about our background, where we are coming from. Now let's look on the governance issues. If you look on section 37, subsection 3 of Banking and Financial Institutions Act 2006, it provided for establishment of composition of the board of directors of the Deposit Insurance Board. In it says there shall be a board in which governor of the central bank will be the chairman, and then permanent secretary, Minister of Finance. Remember, in Tanzania we have two governments. We have the United Republic of Tanzania government, that is a union, and then we have the Zanzibar government, the island part. So both permanent secretaries and the Minister of Finance are members in the board of directors of BAD. And then 3 members are appointed by the Minister of Finance by his own judgment. He appoints other 3 members to sit in the BAD board of directors. And we're talking of this to see how are we operating, whether we're independent or not, because I remember Mahmoud talked about a lot about independence in the insurance board. Again, if you look on section 37, subsection 12, the law provided for Bank of Tanzania to provide staff and facilities to the deposit insurance board so that it can discharge its responsibilities. That means the IB is managed by central bank staff and also a central bank staff. The IB is also inside the house inside central bank premises. So the IB again, management is appointed by the central bank, management is not the board of directors. So this is how we are in terms of mandates. Again, section 36, subsection 1, talk now of a need to have a deposit insurance fund. So it says there shall be a deposit insurance fund in which to be paid contribution from members and other payments. And with institution to manage that fund. And this is People's Insurance Board now. So People's Insurance Board, in our case, it is an institution, it's not a proprietary. It is an institution that is managing the People's Insurance Fund. And also same sections provide that now People's Insurance Board will make payments required from the fund to exercise mandate. So section 39 provides for payment of protected deposits. That is where we are now taking advantage of making the payments. Payments mandate is provided under that section. And I say we have payments plus. So the law clearly stipulates that we use the fund only to make payments from that fund to reimburse depositors. Now, section 41A of the Act provides follows. Where a bank, it means here now, where a bank or financial institution becomes insolvent, as determined by the bank here, it means Bank of Tanzania, the bank may appoint the Deposit Insurance Board to be a liquidator. So here is again where we are acquiring our second mandate of being a liquidator of a closed bank, a liquidated bank. So in our case, we are saying we are paid box plus because we may be appointed to be a liquidator of a closed bank. You see our mandate is very similar to the Deposit Insurance Fund in Uganda. So when they came and learned about us, they decided to go away in terms of mandate. So like we are, like Uganda, we are also famous class because we have that mandate for liquidating the very banking institution. So this is how our mandates are derived from the laws. Now, if you look on Yadua Principle 2, mandated powers, which we discussed here from yesterday, it says the paybox plus mandate is where the deposit insurer has additional responsibilities, such as the resolution function, for example, failing banking institutions, which means Yadi goes for BIS to have power of early intervention in resolving a banking institutions that is in trouble. So that's, I'm trying to just say where the liquidation, I'm saying I put the class, it's the same as what is propagated by Yadi in Aqua Principle 2, where it says you must have. So I'm speaking this because I want to advise my fellows in African countries where are now in the process of putting in place people's insurance institutions to have a paybox class whereby that class is having additional, is having the futures that come from higher markets rather than just because when a market is closed, that is finished. If you are liquidating, you are not doing something different from the liquidation system. But we are talking of the paybox class whereby you have a chance of rescuing these institutions before they go under. So as we think of putting in place our own institutions, let's think of if you want to go A class, paybox class, now talk of the class whereby you are having the other features of the higher mandates rather than just rescue the liquidation, which is already a good case. Now, what is our contribution in the banking system? And I'm going to talk about the experience and our contribution in terms of the experience of getting involved in the payout process of closed bank. So, in Tanzania, on 8 May 2017, one bank was closed. This was a big bank, a relatively medium-sized bank. It was a bank with cross-border relationships. This bank, known as the FDB Bank, had a branch in Cyprus. And surprisingly, that branch operated more than 90% of the business of this particular bank. So, we commenced to pay out to investors in November. We closed in May. We took around 6 months to start payout. Why? Because now we are saying, I'm sharing the experience. So that you can learn from us in the group like this, as you are thinking of establishing new business systems. Why decided that this is an institution of money laundering consent. So, following that decision, we in Tanzania also, the central bank decided also to put this institution under regulation. And I'm saying this institution had regulation had a branch in Cyprus. So why we delayed that much? Because we are talking of 7 days, or at least shortest period of time. Number one, and this is the experience I want to share with you, we faced problem with ex-staff. There was staff from foreign staff employed by the Cyprus branch who was the IT supervisor, and for some of us who are in the IT, you will know what that supervisor means. That means this is the guy who can allow others to operate in the systems. So this guy went into court and they took us to court, complaining some of those guys. There are some rights which immediately to report it to us. We couldn't access the information in this particular bank. So times went on, and we said we cannot hang around without paying depositors because that's their responsibility. So 6 months after the closure, we decided to use the physical money files. So we go to the physical files, physical information that we can access, and make payments to the depositor. Definitely, we have the reporting of the balances from the Central Bank of Tanzania as of the closure date because they are the supervisors. But then, verification of the people in office with the system, we can do it very quickly because it just punch on the computer and give you the picture and give the information of the depositor. This time it was difficult for us, so we had to go through physical verification. So it took time to make that preparation. That's why it took us time. As I shall talk later on, we need to be very smart in handling labor issues when it comes to regulation of banks because of the problems we face in this particular area. I'll talk it later on. Now, in paying this, we use our own staff. We are very few, but we got support from the Bank of Tanzania. And this is another advantage I was planning to share with you when we are talking of PayPost. If you decide to do PayPost, it's my previous speakers and others have said, it may make sense to be the same because we but for payout now, this bank can 5 branches. 1 in Cyprus and 4 in Tanzania. And we are 11 people in the deposit insurance board. How could you manage that? So we relied on our part of Tanzania, they given us support of staff, so we managed to pay our people in this particular bank using the support of Central Bank. So as you start, like colleagues who are thinking of becoming having a insurance system in the whole country, it is sometimes pays to be in the Central Bank, and maybe they don't overstay there. That was one bank. Again, 4 days later, thereafter, the Central Bank put another bank under regulation. This was a small bank, known as being a community bank. And in this case, our payout commenced in July. May, July. So at least here, we used 2 months to pay. While again, this was a bank located more than 1,000 kilometers. My country is bigger than Uganda, and bigger than Uganda and Kenya together, bigger than Uganda, Kenya, and Rwanda together, and bigger than Uganda, Kenya, Rwanda, and Burundi together. So this is located far, far from our head office, more than 1,000 kilometers, and window there where he was paid. Let me share experience on this one as well. I said people had the option of cash or transfer to another bank account. But we are strict when it comes to groups. In this particular bank, there was a lot of groups that had the account in this particular bank. So there was a benefit. I think it was a product designed by this regulated bank that if you want to access loan here, please go into groups, and then so when it came to groups and other companies and the other claim, other deposit other than a natural person, that means a human being, we requested them to transfer to another bank. So the groups, we want to keep the groups, because it is the bank who died. And the people are still there, the interests are still there, the economies there, and they are still there. So for us, we convinced them to open another bank account so that life goes on. So this is what we did in the Linga. So we managed to transfer a lot of groups to other banks, their own choice, instead of closing their. But more important was to make sure that people's lives keep on. Okay, as if that is not enough, 1 year after, on 4th January 2019, 5 banks were put under liquidation by the central bank. Thanks to God, the two exercised the same as a pilot project. So on 4th January 2019, we had another 5 banks closed, and the names are there. And the main reason was that, of course, some were poorly managed, but the main reason that central bank gave is that they managed to raise the capital to the prescribed limits by the. So for the 5 banks, we commenced, which was closed in January, we commenced payout in March. So again, 2 months after the closure. You see, it's a small group of people, of only 11 people, are paid out to 7 banks. And again, given the irrigation money to 7 banks. But thanks to God that we managed to handle it properly, and there was not much complaints from the depositing bank. So, which challenges do you face? Number 1, payout exercise. This was the first ever test to us. We started in 1994, long years ago. So like after 22 years, then this is why we are tested now to start making payout. I did say about the distance of this bank. 3 banks were very far from our area office in Dar es Salaam. So that was the first challenge. Again, another challenge was the learning curve. How do you manage the exercise? How do you, and this was the majority of this story I would like to share with you here how to start. When we moved to these banks in the rural areas, some people were coming to manage the deposit. Exactly. So you go there to start paying out, but depositors are coming with money. That tell us what as depositors. Number 1, these people are very loyal. They like banks very much. They have so much trust with banks. But my money is in safe place. was a challenge is a position that we need now to embark in making use of technology, because we have in this region the M-Pesa, where this alternative mechanism of payment system based on using mobile phones. So we have to devise a mechanism which will enable us to make the payment using the telephone platform. But this again needs to go back to the banking law and the banking mandatory for people to give telephone numbers that will be used in case of a tech failure to reverse the bank. And in case they will check that number, they have to inform the bank so that the information that the bank have about them is will enable the institution to make payment to them. The travel costs to go for the reverse amount. First challenges we now face the money payout. So what are the challenges with the second mandate of liquidation? I will talk about the first link which had branches in Cyprus. So in this case, we face a legal battle with our fellow central bank in Cyprus because they didn't admit us to be the liquidator of the Cyprus branch. So they went to court and filed a case that they are appointed to be the liquidator of the branch. So we paid for the cost to run the court case, and the Supreme Court of Cyprus ruled in our favor that we cannot liquidate a branch. Liquidate a bank as an one institution. So even though the legal battle continued, so until every party, or both parties, we and Cyprus decided that we cannot win by doing that rules. So we decided to sit down and decide how can we collaborate and make the regulation of this bank at the interest of depositors, both in Cyprus and in Tanzania. So as I speak, that everybody will, in a few days to come, will be able to continue the regulation of this particular bank. Remember, I'm talking about regulation, not payout. We need a payout. But the regulation aspect, we met that challenge of a legal between. Another challenge in regulation is that you are 11, most of you bank as come as economists. But then, when it comes to regulation, you need other professions. You need lawyers. You need evaluators. You need asset managers. So those are professions which when you start, you don't have them in-house. So you have to rely on other people to help you in regulation, because you need to know the value of the asset to regulate. Otherwise, you will face court cases. I think that this was the value. That's why I decided to sell it to the same price which is close or the same or above. So you need, now in my case, we have a public procurement act that talks about inviting people to come and be for the business. So it's a lengthy process to speak with the request that the procurement process in our case is a very lengthy process because of the law, the provision of the law that require you to be in a very disclosed manner while people are suffering their problems. So that was another challenge, and I would speak with this and conclude that we need to do something with that. Another challenge is massive integrity court cases. We are taking an institution and we find in that institution that a lot of court cases filed by those people with interest in that particular bank. As if that is not enough, now new cases are also coming in. So we really need the service of the lawyers to be able to undertake the liquidation. So what do you learn now from this experience? Number one, there is a need for a special resolution regime. When Mahmoud was speaking about Kenya, he talked about the issue of having company law, banking law, and settlement law together. So there is no choice for the being appointed as a liquidator. Then there is no need to go to the court again. That should be treated as if it is already a blessing of undertaking liquidation without going to the final case petitioning when it comes to labor law, whatever law it comes to labor law is established when there was a massive retrenchment. So it's talking about the retrenchment. So before you retrench people, you need to look for them. And they agree why you need to have to go home. And the law says you must pay something. So if I'm doing litigation, I must follow the labor law, which has required me to talk to the ex-employees of the close one. So I'm saying, if we have to have a special regime, the law must say when it comes to the agreement, then that job of you, that close bank, automatically sees the day the license has been revoked by the central bank. The procurement law, I've already said about it. You need to say, it will have a provision that's required looking at the procurement law differently when it comes to articulation of a payment. So bank is an important institution in all law, and the payment also need to be looked at differently from the normal business, because today it is no longer business as usual, it is business and usual, and everything should look it as business and usual. We had another lessons we learned, and this we share with single payers. When we like since this one bank, which majority of the depositors belong to certain segment of this bank. So this guy, when we are calling them to come and collect deposits, in their churches, they are told that, don't worry, that bank will come back again, like when Jesus came in. So you made an advertisement to collect deposits. I told them, don't worry. It took 3 days for Jesus to come in, but okay, so again, that's another. And the last one, yes, we need to really have an early involvement, that other aspects of making sure that we try to deal with this before you fail, or we need to have effective implementation of the front corrective actions. So that when the bank is started, then immediately we take actions. If you have a new mandate, then you also minimize that. To make sure that we are engaged in much more early before we wait for the payout. To accommodate gaps that exist between our current arrangement and the principles of the law, let me talk about it. And again, to make us an independent institutions. It makes sense when you have got broader mandate to be independent. This is my point of view. When you are in the pay box, you can still pay the same amount. You get no support. But none of us stay in the pay box. Move out and become, go for the higher mandates. The higher mandates for sure you need an independent mandate to exercise your responsibilities required by the depositors of your institution. Let me say that, and I see my prince, my boss, is made me to quick to speed it so that I can finish within time that has been allocated to me. With that, I say thank you very much, and I'll be ready to answer questions if one will be ready. Questions for one.
So, ladies and gentlemen, as we can see, the business of DIS is a problematic one. It goes to the extent of belief. So even with going down here, they say it's not as bad. But they say that is where the early warning system is very, very helpful. You can show the numbers and share the numbers. So whether somebody believes that the bank will rise again in 3 days or not, you show the numbers. I think Richard deserves a very, very big round of applause for this exposition. Thank you very much for your patience. The whole idea was that we will take the 2 presenters' papers and then we can take the question and answer session jointly. I wanted both of them to be here, but let us presentation, as we know, talked about the steps that they went through, that Kosovo went through in setting up their own EIS. Richard has given us a practical aspect of what to expect by sharing with us what they have gone through. What I found out in many jurisdictions is that they have a lot of theoretical preparations. And when I mean theoretical preparations, there are jurisdictions that have not experienced a bank failure before. So you have simulations and you have roadmaps and all of that. But there's nothing like first-hand experience. That is what Richard has brought to bear. Richard said recently the central bank revoked the licenses of 5 banks, 7 banks. That's a lot of experience. In Nigeria, last year, the central bank revoked the licenses of 155 microfinance banks. So if you want to talk of experience, but these are the microfinance banks. These days in Nigeria, what we try to do is avoid liquidation as much as possible, because really that is the last resort. So we go more with P&As and bridge banking these days. But it's good. You have to be prepared. You have to know what the situation calls for. So you have all your resolution options, but then what is the least cost and what is the least disruptive? If you have to travel 1,000 miles to go and pay somebody money, your cost is going to be very, very high. So I think the use of mobile wallets to achieve that is really a very good innovation. Violetta, thank you again for your presentation. I'm sure you know that a lot of questions will come to you. So because it appears we have overshot, we started late though. From my timing, we started late, not by the program. So we still have to abridge the Q&A time, isn't it? We have 30 minutes. So we'll start by taking questions. You can just let us know who your question is directed at. Okay, we have one. Okay, start, yes.
Thank you very much. Mine is
well, sorry, where are you from, please?
My name is Peter from DPF of Uganda, and my comment is to Richard, maybe a question for Violetta. The comment mainly results as a way forward. It's unfortunate we had a case in Tanzania of a faith-based institution not being run properly, but I think we shouldn't be too fast to draw conclusions from it. Because in Uganda, we have cases of faith-based institutions that have gone from strength to strength, and one of them is actually among the top 4 or 5 biggest banks. So I think it's something we need. I think the statisticians call it, to avoid sample selection bias. Let us present a more balanced argument. Going to Violetta's presentation, you mentioned that the target fund is 8 to 9% of the insured deposits.
No. Of total deposit.
Yes.
Oh, okay, because it had said insured deposits, and then also the assessment had said that the premiums are also assessed on insured deposits. And yet, the assessment by ADI also said there are no emergency mechanisms in place. So maybe if you can clarify on that, because the 8 to 9% looked really small, given that you don't have, backup, mechanisms for funding.
Thank you, Mohammed. Shall I reply or?
Yeah.
Okay.
You
Percent. Sorry. Moderator. Yeah.
okay? Maybe let's take 3 to 4 questions first, isn't it? Okay. I hope you are noting down the question.
No.
Yeah, good.
My name is Emily Osuji. I'm from Nigeria. My question is for Richard, and it's so simple and direct. You mentioned that during your closure, one of the banks, some people brought in money because they were not aware that their bank was closed. I just want to know how you treated that money, because we experienced that in 1998. I just want to know how you treated that particular amount or sum that was brought into the bank. Thank you.
Sandia?
I think my question will be directed to the two speakers. In deposit insurance, the emphasis is likely on the need for a strong corporate governance. Central Bank, I'm taking Nigeria experience. Central Bank in Nigeria is charged with licensing of banks. When the bank license is revoked, they are in the forefront. The Nigerian Revenue Insurance, more issues. CBN is playing a very strong role on the board of the two. Part of what should be done is to try and create a strong semblance of independence. Yes, the CBN will be involved as a key component of the safety net, but it's equally important that the two roles are separated. What is done in Nigeria is likely cooperation. You cooperate with each other to encourage stability. But in a situation where the CBN governor is chairing the board of the Civil Insurance, it calls for question and the need for separation.
Okay, let's take the 4th question. There's somebody behind it. I think there was a hand behind there.
My question goes to Richard. You said 5 banks were closed in 2018.
Please speak up. We can't hear you.
You said 5 banks were closed in 2018. We were the examiner at the time. And then do people still believe in saving banks from that incident? Thank you.
Thank you. Maybe now we'll start with Violetta.
Thank you. First question was with regards to the target fund size, and it's 8 to 9% of the total insured deposits in the system. And it's set, it was an NAFSAP recommendation, and it was set as such that David was explaining that deposit insurance systems are not there for systemic. So the target fund size was set that we are able with our own funds to compensate insured deposit of 2 smaller banks or 1 medium-sized bank. So this is in our in nominal values, this is 8 to 9% in percentage. So in our sector. So with regards to the premium assessment is based on the insured deposits. So the banks are obliged to report on quarterly basis the insured deposits based on the aggregation rule per depositor. And they report that, for instance, if it's 100, let's say 100 million, they will pay the rate of premium assessment. But how they are rated, it's not, we rely on the central bank. So it means that we will take the supervisory ratings, the CAMEL rating of the central bank, and we have applied to our differential premium system. I think the question with regards to potential strong influence of the central bank, I think in one way you're right. The design of the pay box will inevitably have some kind of influence, because you're very reliant naturally, because of information on the newly licensed banks, information on those problem banks. So there is some kind of reliance. But going back to what Mohammed was explaining, I think the independent governing body, I think, will be as a balance to maybe balance that influence and ensure that Deposit Insurance Agency has that operational independence it needs to fulfill the objective. But you're right, there is potential because of the reliance to have some strong influence. Yeah, thank you.
So Richard.
Okay. Thank you. I didn't get Peter's, he said it was a contribution on the statistics and the saying to make a balanced decision. I didn't understand which bank particularly you are referring to. Maybe we'll talk during lunchtime and we'll let you know. So Peter had just an observation and he asked me a question. What happened to those people who came to deposit? Other bank was already closed. So to them they had two news. One, bad news that this bank is closed. But the second news was the good news that even if this bank is closed, we are here to reimburse you. So for this particular, in all these small banks, let me tell you that we managed to reimburse more than 97% of the depositors, 100% of the deposits they had in this particular small banks. I mean small banks. So some of these didn't lose anything. So the bank was closed, but then we had an opportunity to explain to them now, who are we, what are we doing, where are we there. So even if the central bank closed this bank, we are here to make sure that you don't lose the balance you had in this bank. So that was a good news to them. And then we really advised them to continue with banking business because we are there to take care of them. And then we really explained to them that this is a likely event to happen. Another aspect, another important thing to note, for these small banks, community banks, most of the people around these areas were also shareholders in this bank. So they were really their banks. So they really had a big faith in them. It is their bank, so they don't have to worry. So again, as I said, it gives us a clue that we need to do a lot of public awareness. People to understand there are bank failure, but even if there is a bank failure, there is a deposit insurance which is taking care of them so that they continue depositing with the banks. Because one of the speakers talked about the core deposits. These people in the rural areas, they put money in the bank, they don't touch them for quite some time. So the banks use them to intermediate. So they're important to deposit, the small ones. The big ones, they come when there is treasury bills are paying more, they just took money from the bank and go and invest in those areas. But these small ones are very important also, even when we are talking of the liquidity of a bank, because they provide core deposits, the deposits which are not volatile. So they keep money there for quite some time. So we are happy that most of the people were fully covered, and then we passed this message of deposit insurance that we are there. And again, we advise them, as I talk about the groups, to go and continue banking with other banking institutions around that particular place. The guy from Nigeria also asked me about governance issues. It's true. When I in the central bank doing licensing, doing supervision, doing regulation, doing supervision, doing the closing, resolution mandates. And again, we are inside BOT. People, and when I say BOT, I mean my Central Bank of Tanzania. People cannot really make understand what this central bank is doing. So there is this need of putting an independent institution with a completely independent board of directors, and so that the public can see it clearly. There is this institution mandated to do this, and that is doing it for the interest of, and is clear, correctly said. To have a bad example, a bad experience by people come on wheelchairs and they want to go to hospital, they cannot access the funds. What do we do with them? A lady who was the breadwinner in the family, because the man is already paralyzed. So the woman was the one struggling in trying to make sure that the family continue to exist. So she was doing lot farming, and she had 6 million in that particular bank. This lady had 2 kids, three kids. One was at the college. At that time, the college was asking for the fees. The other 2 were in high school. Again, she was also required to pay the school fees. And then she came to me and said, what am I going to do now? The old man is paralyzed. He's the woman take care of him. And these kids want to be in school. What do we do? So I had to really go to try to talk to him. And this time I decided to take number of the son who was doing the college and try to explain what is happening. I tried to talk to the college that yes, the parents had money in this thing, but this bank now is under liquidation, so there will be a delay in the money coming in so that he can sit for the examination. We couldn't continue studying because our money went with the bank which was where our parents was keeping money. That will not be a good story to them. They will hate the bank from day one. And then you don't have, we need to make sure that we build future depositors by making protections in there, where we must struggle as much as possible to avoid closing a bank. Closing a bank is a bad story to everybody. It is a bad story to the economy because you shut down the liquidation, the intermediation process, you shut down employment, you shut down taxes to the government. This is not a good story. And if you go to the field, you meet people with different stories. I had this ticket going to India, I want my money to attend a treatment in India, and then you cannot give me money because the laws is there for you to object. So bank failure is not a good story from my own experience. Okay, somebody asked me about 5 months. Were you examiner during that time? I left. I was already the bank examiner by the time, but bank examination was there. And these reports were there as well. So the banks was closed because they were poorly managed to the extent that the central bank had to close them. Somebody asked me, are people still saving now from that experience? And I'm saying, from our experience, we managed to pay more than 97% of the depositors full. 100% of the money they had in these closed banks were reimbursed, with the exception of the FBME, the one with branch surplus. That was medium-sized one. So you talk of the people with big money. But these small ones, we managed to reimburse more than 97%, 100% of the balances they had in a bank. So to them, it was a good story. Only the delay is a good problem, but at least they discovered that there is a mechanism by the government to take care of them when a bank has been closed. So people are still banking. People are still banking, and I say this because people keep on asking, do you really have the confidence that people will continue banking if I'm talking of the maximum I'm paying? It's too small. It is too small to big people. Like you are big people, you are running businesses. Can you run a business without your bank? You can't. You must continue running a bank. Only that you need to choose which bank are you dealing with. So the small ones, they take care of them. The big ones, let them be disciplined by the market discipline, so that they contribute in improving performance of our banks. I hope those are the questions.
Sorry, thank you, Richard. Maybe before I go back to my moderator, de facto moderator, maybe I could just make 2 comments, very 2 quick comments. What I always say that bank closure affects life, responsibility bestowed on us to make sure that these banks don't close. 1. Number 2, violators say that they charge the premiums based on the insured sum. For us, we charge on the average total deposits per annum. which I think is the right way because it will own funds. So maybe that's another clarification I wanted to make. Now I will allow Prince to, maybe he wants to ask a question or a comment. I hope I have not overtaken your position.
I assume it's better for me to go inside and ask questions.
There you go.
I was meant to ask Violetta a question. Maybe you can help with that, and David is here as well. On the 7-day compensation, David is paying attention. Violetta talked about the 7-day compensation. Find out, because yesterday
It's actually been in place in Japan for about 15 years because they require continuous weekly updates of depositor data from every bank. I mean, this is one of the issues, is this level of information flow. It's also in place, I believe, in Taiwan as well. So it's not the majority of systems, these are selected, but often it's the case it's just mandated by law because of a crisis in Europe, or it's just the way the deposit insurance system has evolved through a series of bank failures and the requirement of information from the banks. What we noticed is in jurisdictions where they had not had a lot of bank failures or very few bank failures, there was never this pressure to push the insurer and supervising the central bank to require this information from the banks. But when an event has occurred or a crisis, then there seems to be the will to do that. Because it is, the banks often are the ones that are bearing a lot of the costs right away. They have to develop management information systems to transmit the information to the insurer. Then the insurer has to develop the IT structure to use it. So hence it's a time-consuming and costly effort, but once it's established, you get the type of rep. You avoid these situations where depositors have to wait for very, very long periods of time for liquidation or additional funds.
When you stepped out, we were talking about the 7-day compensation period, and because in your paper you had alluded to the fact that you employed information system and legislation to drive your premium assessment and collection. And you also talked about the 7-day compensation period. So we're wondering how practical is that to achieve? But David just told us of some jurisdictions where they have achieved that because it is the law. What exactly is it in your case?
Thank you. I think the 7-day target that it has, so it integrates reporting to ensure determination of insured amount per depositor. And then we have integrated also the payout agent bank. The payout agent bank has been selected in cooperation with the central bank. We have 2 payout agent banks. So the idea is that if one member bank submits the data, it's processed. The submission timeline is a maximum 72 hours. So they will do that. Our system will then process that and will generate what is called the payout list. The payout list will be accessed by staff of the payout agent bank. And this is, once the deposit comes to the branch, they will identify themselves. And then we have done a simulation. Actually, we have hosted a simulation exercise. We have invited Albanian Deposit Insurance Agency. We were 11, and we have, within 2.5-day workshop type, we have simulated together a simulation exercise of the compensation, and we have managed to process, to have the payout on the 4th day. So basically, it is visible, but you need to do a lot of preparatory and advanced work. Otherwise, if you don't have the system, you can't do it. Second, if you don't have the templates, name of the bank, it's very difficult to do it. But what I would recommend is that there are 2 crucial, I think, key success factors. One is the ability of the member banks to provide with good quality of data. And those, if you do regular on-site examination, they will be able to achieve that. Second, the timing. If they are required that those data to be submitted within 72 hours, you'll be able to achieve. But if that gets delayed, then of course you can't achieve. And what is also important is that yearly you do the simulations in order to improve, because we have done 2 simulations, and 2 simulations we have done while building the payout system, and 1 with Albanian deposit insurance. And out of 3, we have learned so much from just working within DIFC. So that will be my comment. It is visible, but not within short time frame. You need to say, okay, like strategic goal, you need to say, okay, I will be able within 5 years or 3 years. And as David was pointing out, if you have a plan, that will be taken into account by the experts who are evaluating the system. Thank you.
Yeah, thank you. I think we can take few more questions, maybe 3 more questions. 1, 2, 3.
Richard, you have taught us a bit of geography today, that Tanzania is a humongous country, but with size there are also consequences. You know, a big body, with a big body it becomes a complex issue even to bend and touch your toes. So I was wondering, with the size of your country, how depositors access your offices. Do you have branches all over Tanzania? And what are your strategies in terms of the publicity awareness to ensure that you reach all corners of Tanzania? Thank you.
Thank you very much, Mr. Moderator. Good afternoon, colleagues. This is a very interesting presentation, and I learned a lot. The only area that I want some clarification on is the remit or the scope of the Tanzanian deposit insurance. Because in your presentation, I saw you talking about community banks. And when you say community banks, they tend to link more towards non-bank financial institutions, microfinance and SMEs. They may be different from the big conventional banks. So I don't know whether I'm deceived by the name, or community bank in Tanzania is the same as community bank everywhere in the world. But I know community bank is a special breed of its own when it comes to banking. So if you could help us to get an idea about the scope and the remit of deposit insurance in Tanzania. Does it cover the entire financial sector, or is only some selected part of the financial system? Thank you very much.
We are taking the last question.
Thank you very much, Richard. My name is Odi Shafinambovi, the CEO of Yuga Fort. I just wanted to find out from Richard on what impact was affected, or as far as the fund is concerned, how much was paid out of the fund to the depositors. Thank you.
Last question.
Thank you very much both for the good presentation. Ndugu Richard, you started well ahead of us, so there are a few things we can learn from you. So my question, very brief one, is from the sound practice perspective. Now that you're a member of IADI, the IADI core principle number 3 on governance has the very first provision as operational independence. So from what you're independent, now to help the rest of us who may be in that situation pave a way, what do you plan to do to come into the ambit of sound practice with your governance? Thank you.
Okay, I can see most of the questions are directed to Richard. Richard, you may make us earn our lunch.
Thank you very much. I'm pleased to see we people would like to know much about us. So let me respond to questions as follows. Number 1 was big country. How do you manage to access people? Should people walk all the way to your own banks? Now, this is my response to this question. Yes, Tanzania is very big, as I mentioned, and it's really, we have scattered people across the country, but we have one big weapon in Tanzania, that we speak one language, that is Swahili. So if I go to radio and speak in Dar es Salaam, I speak to the entire of Tanzania. So when I have an advert in the radio, in the television, in the newspaper, it is written in Swahili, everybody will get the message instantly. So this is a big up and a big reward that our first president, Julius Nyerere, left with us. He managed to unite the country, whereby he left behind a country speaking one language, and that is Swahili. That doesn't belong to any ethnic group within Tanzania. It is a language of its own, made up of these ethnic groups, Arabic, all other English, and many other multiple languages in it. So we use this big weapon, Swahili, to deliver message to our people. We're also thinking of using technology. Nowadays, you can send a message through mobile phones, because majority of people in Tanzania now have got mobile phones. To send the message through that one. We also intend to engage responsible authorities in Tanzania, like a Ministry of Education, to make sure that we have curriculum, in the school curriculum, somewhere maybe from 6th form 4, maybe colleges, we have a subject whereby the concept of deposit insurance and the entire financial literacy issues are taken on board at that stage, so that these graduating people who are potential depositors come from the college, from the school, with the knowledge on deposit insurance and about the issues in financial literacy at large. So this is my response to the first one. So we are privileged to have one language, that's Swahili. Number two, community banks was only one. We are headquarters at the end of it. So we are communicating using. Your branches in Arusha? That's a branch of Central Bank, sorry. we can use them, but then those branches, we have about 6 branches, Central Bank branches, in the zones, about 6 zones of Tanzania, but those are Central Bank branches. We don't have staff inside branches who take care of deposit insurance issues, even though we can, and so we communicate from the head office. And as I said, we use the radios, we use the TVs, we use the, but communicating in Swahili. If I speak today after news bulletin, I'll be speaking to the entire Tanzania. Everyone will be listening to the message I'm delivering to them, because we are speaking the same language.
Yeah, but how do you pay to all those? Do you pay through the central banks, or do you pay through the commercial banks?
We do pay. For I did say, from our experience, we made payments using the same branches, using the same branch of the closed banks. So that's why I had to travel to Mbinga, which is 1,200 kilometers, to make sure that we are present there and we are making payments to people. Excuse me? Thank you very much. We use the service of this bank I'm talking about. So the bank used their own money, and we are refunding them on weekly. So we entered into an arrangement with this commercial bank, whereby, and the head branch in this locality, so it was easy. So they moved it with the cash in the paying area, so they paid, and on a weekly basis we are reimbursing them depending on the amount of the money they used. So this is about the first question. The second one was the concept of community bank in Tanzania. So community banks in Tanzania, by definition, we are talking of the banks which are restricted to operate in one locality. You cannot open branches. But then they are licensed by central bank. So it was a move by the country to make sure that the majority of people are really accessing banking services. So the central bank allowed people to open small banks in their own communities, but of course subject to prudential regulation. We do provide protection to institutions which are licensed by Bank of Tanzania to do banking business in Tanzania. So we don't go for the microfinances and others. If it is a microfinance, then it must have a central bank license to operate as a deposit-taking institution. So we have few microfinance institutions who are deposit-taking institutions. So our interests are depositors. So this is the difference between maybe my community bank and yours. It is a bank with Bank of Tanzania license, but restricted in one area of operation. They cannot branch off. The second one, the third one was the percentage of the amount of money. We paid close to 8 billion Tanzanian shillings vis-a-vis a fund of 434 billion Tanzanian shillings. So 8 billion vis-a-vis 400 billion. So we can work out the calculations. $8 billion, maybe that's what people. Our exchange rate is 22.
Maybe you can calculate them in dollars.
It's very small amount. It's very small percentage of the fund, frankly, so to speak. It was very small amount of the fund. Maybe next time I must be smart to provide the data.
Provide the dollars.
Because remember, these are small banks. They are all small banks except FBME. So they are small banks. I say they are operating in the restricted areas, so it wasn't a big deal, so to speak. So we used just a small amount of the fund to make the reimbursement. The last one was on governance. That yes, you've been there for quite some time. You're operating in the big brother Bank of Tanzania, and you are talking of independence. It's true. So what I've done, I did mention there, maybe I was very quick in doing that because of time. I did say we have in the pipeline a proposal to enact a new law, that is government deposit insurance institution in Tanzania. That will be independent. That will comply to the core principles, including core principle, is it number 5 on governance? Number 3, governance whereby now will not have safety net, other safety net participants sitting or being majority in our DIS. So this is our plan going forward. I did put way forward issues there. So this was one of them that, yes, we appreciate. And really, it's very difficult to operate at a central bank from our own experience. When you need a staff, you don't get them on time. And at time, when you get the staff, it's not the staff what you want. There is a challenge of operating as DIS at the central bank because the central bank is having its own priorities. Right, so sometimes maybe the priority of deposit insurance does come in clearly or straightforward. Unless maybe you are lucky, if that is to be called luckiness, you have to close the banks. The central bank understand now where is the importance of central bank is. So it is a bad news, but it is a good news to deposit insurance because now everybody, including ministers, the cabinet, and everybody now understand, it is important to have a deposit insurance because there is a bank failure. So it's an opportunity at a time, so it pains people.
Thank you, Richard, and thank you, Violeta. Before we close, I just want to make some. I want to make some 3 comments. My comment number 1 is, for us, when it comes to payment of depositors, we have a platform called the Real-Time Gross Settlement nowadays, where we can send directly the money to any account you can open in any bank. And now for the last 4 years, we have even been using the M-Pesa, your mobile number, so that you don't need to go to any branch. Once we have all your details, the money can be wired into your mobile account. We are trying to leverage with the financial technology to see how we can efficiently send the money to depositors. 3, I saw something in, I was going to ask a question, I saw something in Richard's law where he says that central bank may appoint. I think next time have it central bank shall appoint, because when you have may, that's no wonder in Cyprus they were going to court because it was like, it's not mandatory for them to be appointed. Somebody else can be appointed. That's why this morning I was talking about we have to be very careful with the way we legislate our laws, because our laws can also either encapsulate us or can free us. So we have to be very, very careful with our laws. And I think the best practice is by IADI, let us see the laws from other countries, then we can have. Somebody asked me a question over tea time, which I thought is good for me to share with all of you. Somebody, actually, I don't want to mention the name, anonymous, asked me, why can't we have a reinsurance? Why deposit insurance? If, say, we have a firm which can reinsure everybody, why bother with deposit insurance? And I know maybe some of you may be having those questions in mind, but the answer I gave him is that once you have a reinsurance, you create what you call moral hazard. The banks will not be prudent in the management of their affairs, their businesses. So you see, when that market discipline will disappear, moral hazard will set in, and our banks will be failing like nobody's business. And as I told you, failure of a bank affects both life and business. With those many remarks, I really want us to give a strong round of applause to these gentlemen and ladies for a wonderful presentation. And I also want to thank the participants. I think this has been a very interactive session. I can now hand over my hired responsibilities to the MC there. Thank you so much.
Thank you so much, Dr. Let's give him a round of applause. Before we break for lunch, the next item on the agenda is lunch. I just want to remind everyone about these sheets that are on your desks. This is where you need to indicate the activity that you will be participating in the afternoon. For those that are interested in the gym, there are aerobics classes that take place in the gym as well in the evening. So if you're interested in aerobics, feel free to take that as well. We are going to reconvene at 2 p.m. So we're having lunch in the restaurant where we had lunch yesterday, and then we will be back in this hall at exactly 2 p.m. All right. So someone will go around and remind you when the time is almost up. For now, if you've already filled this in, drop it off at the registration desk on your way out, and let's reconvene at 2. Thank you.
A key role in contributing not only to the financial stability of Uganda, but to the entire African region.
Deposit insurance protects depositors, gives them comfort that their funds are not too much at risk, and ensures viability.
I say, concentrate.